All right, so this is another trading video. So thank you so much, guys, for the great response on day one. I've gotten 95 views and 2 likes and 2 subscribers, and that's fucking insane. So thank you so much for that. And today, it's not a video as usual. I know a lot of videos are boring because I'm not actually showing you what I'm doing. So I've just um, I've decided to make the video. So when I was on day 4, I started making the video of day 1. So that is how it is working, and I'm just gonna fast forward to my current progress and whatever I've done this whole time. So all right, now I've done a lot of back testing. I've done 17 tests, and I've gone through a lot of things, and I've worked on my strategy, and finally decided I would be using a particular strategy which is really good, I believe. So let's see what that is. Now, first of all, I don't know if I'm right or wrong in the strategy, but this is what is working for me, so I'm just gonna go ahead and try it. This is a combination of my all the I went to YouTube and looked at a lot of videos about the best strategy, and I've used them. I've changed a few things, and then I finally got into this position. So let's see. So what I've done is I've made an Excel sheet, and I've had each test, and I wrote all the data required and the comments on that, and to look at how it's working, how it's not working, and all that. So let's get started. Now the first thing is, let's talk about my strategy, and this is my strategy. So first, I check the trend. All right, so let's say I'm on the let's say I'm anywhere around here. All right, so let's say that in the weekly time frame. Yep, so as you can see, from the previous 2, 3, 4, 5, 6, from the previous 8 to 10 weeks, it is in a downtrend. So I say that, all right, so in the weekly time frame, it is a downtrend, so it is bearish. So I put in bearish, and then in the daily time frame, it is again bearish, as you can see, because it's making lower highs and lower lows. So where was that? Yep, so it's making lower low, lower high, and it's probably gonna make a lower low again and make a lower high and a lower low. It's gonna go like that, maybe. So it is probably going in a downtrend in the daily time frame, and in the 4-hour time frame, it is again, yeah, it is obviously going in a downtrend again. So yep, it's going in a downtrend in the 4-day time frame as well. So we're gonna have bearish, yeah, bearish, and in the 1-hour time frame, let's see how is it gonna go. Well, it's going downtrend again, as you can see. So this is bearish as well, and then we'll look at the 15 minutes time frame, which is okay. So maybe this is consolidating. So let's make a list of the highs and lows. So well, these are the, all right, let me just remove the, yeah, so these are the the highs and lows. So as you can see, it was having, yeah, so there was a break of structure. So it was having higher highs and higher lows, and then it started having high, low, a lower high and a lower low again, and then it's probably gonna have a lower high and a lower low, lower high, lower low, lower high, lower low. So it's again, it is bullish over here as well. So it is bearish over here as well. And then oops. Yep, so it is bearish in this as well. And then we have the 5 minutes time frame, which I don't really care about. Generally, this just gives me confidence. Okay, so I don't really look at the 5 minutes time frame a lot, but then yeah, it does help me give confidence. So as you can see in the 5 minutes time frame, again, we have high, low, lower high, lower low, and then it's probably going up to make a lower high somewhere around there, and then a lower low somewhere around there. So it's just having that moment. And then so again, that is bearish. Okay, and then what we're gonna do is confidence. So I just make sure that I'm confident in all the things. And then we have the time frame analysis. So we check if the trend is same in all of them, or if you need to wait for it to become the same. So you see all these are bearish. So well, the answer is going to be yes, everything is having the same time frame. And then we're gonna draw the magic trend line. So over here, the trend is bearish overall, and so in the bearish trend we make a trend line in the lower highs. So let's go to the 1 hour time frame and draw a trend line. So as you can see, this is our trend line. So it starts from about, let's say, over there all the way till there. And we can maybe sort that in the 5 minutes time. So I make one in the 4 hour time frame, 1 hour time frame, and then one I make it in the 4 hour time frame as well. So I tend to, this is the 4 hour time frame, it's the one in the 1 hour time frame. So maybe we can make another one right around there. So I just make two based on situations and see which one actually works well. So this one I'm gonna have this color, or maybe it have some other color like that. So and then after I make the trend lines, I just make the breaks. So the break, you know, the points where these intersect. So I draw one over here, one over here, and one over here. So these are the three key areas, and I just want to delete the one because it's just confusing us more. So there are 3 intersections, and I think that's a good way. And then once I see the 3 intersections, let's just say that I'm gonna go back in time to actually show you guys how this works. So let's delete that, and let's go to the select bar, and have this. So time frames. Yeah, so that looks good. So let's just say that we are in this situation and we're having our like that, and then we have this over there and another point of intersection around there. Okay, so this is the magic trend line. I've learned this from a YouTube channel called The Trading Geek, and it's really helpful. So what this does is, so you make a trend line and then you draw the intersections or the points at which there is the line, you know, the graph, the candlesticks touched the trend line. Okay, and so once you do that, we're gonna focus on the areas of interest. So the areas of interest is basically the supply and demand zones. If you don't know what they are, I'm gonna make a separate video about them really soon. But yeah, so let me delete that, and that. Okay, so let's talk about the key areas. Now, the key areas are the areas where there's huge inefficiencies. So let's see, there is a huge candlestick right around here compared to other candlesticks. So maybe this over here could be a possible supply zone. And then we need to look for more zones around here. So let's see. Okay, so again, there is, so let's just see how the graph is going. So it's going like that, and that. So we can go into the 1 hour time frame to find more of that. So the 1 hour time frame, and see what do we have here. So again, able to find huge candlesticks. All right, so let's go to the 15 minutes time frame to see for more zones of interest. That's the supply zone. Okay, so again, this over here, so you see this zone has a lot of demand because you see around this zone there's a lot of bouncing of the thing up, so the graph just touches that and just goes up, keeps going up. So this is another demand zone according to me. And then yeah, so it's the key level, and I think that is all for the areas of interest. So if we zoom in a bit more, there is, yep, I think that is all. Yeah, so we just found 2 zones, and what we're gonna do is after we find the zones, we need to use the moving average. So how do we do that? So I use 2 indicators, the moving average. So over here, if I click on for moving average, the exponential version, so I have 2 of them. Double click on that, I mean click twice, whatever you call it. But then, so the first one is the EMA of length 9, so I have it of the length 8 and red in color, sorry, green in color. And then I have another EMA of length 14, which is red in color. So as you can see, whenever the graph tends to go up, so let's just focus on a particular point. And so whenever the graph is kind of going up, you see the green line, you know, this green line is gonna be above the red line, and whenever the graph is going down, the red line is gonna be above the green line, and that is a really nice indicator, which I believe is the most useful indicator of all time. And then after that, all I do is just see if the crossovers are in the zone. Okay, so we're gonna wait for the graph to break the trend line a bit. So maybe I can make the trend line a bit more clear by having it like that. And all right, so this is the key area as well. So okay, now what are the key areas in this case? So the key areas are the demand and the supply zones, which we've already marked, and okay, and they include the lines of intersection between the candles and the trend line. So well, yeah, let's just look at when there is a break of the trend line. So what we're gonna do is we're gonna analyze the candlesticks. So you see the market structure, which we've already done. There's higher, lower highs, lower lows, and as soon as there's a lower high, we know that the graph is going to go down to a lower low. So that is how we want to work. So it's going to go up, sorry, it's going to go down, break the trend line, go up, and then down. So my estimation is it's going to go like that, and it's not exactly that. To be more precise, it's going to go like that and just touch, you know, maybe touch this, and then goes down and then touches the previous low again. So well, that is how I'm expecting it to go. Let's see what's gonna happen. So I go 1 bar forward. Okay, we can actually go to the 5 minutes time frame to get a better view. All right, so what we're gonna do is we're gonna wait for the graph to go down, and then we know it's going to go up to a certain point, and then we're going to take a sell position. So we're going to take a short position and have our stop loss something like that, and the profit somewhere about that level, and then have our thing as soon as there is a break of trend line. So what I'm gonna do is I'm also gonna have a, yeah, I'm just gonna play it and see what's gonna happen. All right, so this is a huge a huge candlestick. So maybe this is another point which we can focus on. So there is another zone, which I think is a supply zone, and then we go through. All right, so all right, so there you see there is huge candles here as well. Maybe I could have marked that area, but then I did not. So all right, so what's happening over here is that it's gonna forward a bit more, and then you see, okay, so you see this is what's the important point, and all our criteria has reached. So we are in the supply zone. This is gonna cross over, and once it does, we can take a buy position as well around here. So I know that it's gonna go up to a certain level and come back down. So we're gonna wait for that to happen. And then you see there's an intersection right above there. So I would have taken a trade around here. And then I've put my take profit around this level and my stop loss around this level. However, that's not a good idea at all. You see, it's just 1:1.42. The reward to risk to reward ratio is 1.42, which is not a good thing. So I won't be taking the trade. So I want the price to go up and then go down again. So it went up and then, so you see it seems to go down. So in bullish we always buy, and in bearish we always sell. So we are looking to take a short position. So we need to wait to see. Yeah, so as you can see, the red line, let's come to this bar. This is where we would focus. Yeah, so you see here is where there's a huge candlestick downward. So maybe I think I should be taking the short position around here, and let's see the next candle. And yeah, so well, that's the confirmation. So we take a trade on here so that it goes down to the, it doesn't go more than the previous high, which I believe should be this. So maybe that could be my stop loss, which I'm not sure, and my take profit would be right around here at least. I would just put it about 3. The ratio, I just want it to be 3, which is pretty good. And then we are gonna have to see what's gonna happen, and we'll just see. You see, that's a profit. That's an absolute profit out there. So I've gotten a profit with the risk to reward ratio as 3. So that is how my strategy is working. So basically, let me show you guys real quick on OneNote. So what I do is I just see if the graph is bullish or bearish, right? So we just make sure to look if it's bullish or bearish. So if it's bullish, we need to buy, and it's bearish, we need to sell. So that is a long position, and this is a short position. So if the graph goes like that, we are looking to take a trade around there, and this is our take profit level. So generally, let's say that the graph is going not like that. So that's the graph, and then you see it's making highs and lows and highs and lows. Sorry, it's making higher highs, higher lows, higher highs, higher lows. So our the point where we're going to go into the market is this point. All right, so we would take a trade, we would take a long position. So this is the trade level, and then our take profit should be about the previous high. This is the take profit, and then the stop loss should be about the previous low. So maybe around there. So this is the stop loss, and the stop loss could be bought more down if there is less confidence, and bought more up if there is more confidence. So there's going to be our stop loss, and then the price in bullish, it touches the low, and then it goes boom, it just goes up again like that. So in that way we can make profits in the trade. And let's talk about the bearish market. So in the bearish market, the graph would be something like that. And so what we would do is we would just make sure to analyze the chart. So we see there is lower lows, lower highs, lower lows, lower highs, and all that. And then we just look, let's say we are at this point. So if we are over here, we wait for the price, let's just say we are over here. So we wait for the price to go up to this point, to a point where it changes the, it just goes to a maximum, and then from there, this is where we would take a trade. We would not take it exactly over here, we would take it around here, because we need to confirm, and the confirmation can be seen through this small gap over there. So we would take a trade over there, again over here, and then we would put our stop loss at about here or here, depends upon your confidence, and then our take profit would be right around there. And then you see we would have a profit about, a really good profit. So that is how our thing is going to work. And then, so you see, once we take the trade, in this small area, we look for confirmations. There's a small downtrend. So what do? We look at the market structure, and then the moving average, and then we see the key area, and then we might also see the Fibonacci indicator. So this one is optional. I generally don't use this because it's gonna make my thing really complex. And did I miss out on anything else? Yeah, I think that is it. Well, that is it. And then this is how you take the trade and become profitable over time. And until now, I've seen that there is at least 80% win rate on this. So even however worse it gets, I would still have a win rate of about 50%, which I hope I will. And so let's say I have $10 with the risk to reward ratio as 3. So let's say I have $100, not 10, $100, and then I take $1 on each trade, and then I make 100 trades. So let's say there is 50% success rate. So $50 becomes 50 into 3, and then the 100, and then the rest $50. This is the profit. This is the profit, and the rest $50 just have 1. So this is the loss. So the profit is $150 and the loss is $50. Okay, and then what I would do is just remain at $100. So I wouldn't have no loss or profit, and so I would have no loss or profit, obviously. And then in a few trades, I will be going for more risk at the same time, more reward. So I just, let's say that over here, let's say that you are. So if I luckily be able to identify a supply or demand flip zone, then I might go for a 1:5 or 1:10, something like that, and that would make me $150. So I believe that overall, if I have this, and then I succeed at least on 50% of the trades, or if I have more risk reward ratio and I have 50% of the trades, then I think that would be a really good trade, and I would be able to profit no matter how many losses I get, because at the end I'm going to have 50% success rate, which will help me make a lot of money. So that is the plan for this. That is the strategy which I'm going to use. All right, so thank you so much, guys, for watching, and I'll see you in the next video where I'm probably gonna teach you guys trading as well. So those who want to learn from me after